Let's bring in Kevin Kelly of Kelly ETFs. And yeah, what's going on with this VIX? And your main point, it's not fear, it's uncertainty.
Yeah, so the VIX index is actually an indicator of uncertainty, and that's why you're not seeing it spike pretty significantly, because we've had range-bound markets. And so today's VIX level at 26 really indicates a 1.625% daily move over the next 30 days. And we've seen that actually if we look backwards for the past 30 days, right? We've seen these up and down days, and we've really been range-bound. And so it looks to be that VIX is indicating that. And today's market move is really predicated on the fact that the market was pricing in peak inflation, and now peak inflation theory is gone.
Yeah, it certainly is gone. At least right now, it's amazing how quickly the narrative changes. And there's that range that you're talking about for the S&P 500, still holding the uptrend from the June low, but yet below resistance of the 200-day moving average. It's going to be interesting to see how that goes, because, of course, those 1.6% moves that the VIX is pricing in, Kevin, those can be up moves as well.
Yeah, they can be up moves, and we've seen that over the past several days, right? I mean, today's moves only really wiping out the past 3 days' moves to the upside. So where have we gone? Really nowhere. So it also incorporates up and down moves. It's an average of the next 30 days.
So rates having implications all over the place. Before we talk about mortgages, let's first talk about this Friday, because it, of course, is options expiration. I heard Mike Regan and Beyond the Bell talking about that, but it's also triple witching. How much of an influence is that expiration, that expiry on Friday of today, and frankly, the 4-day rally into today?
Yeah, it's going to be a big impact actually into options expiration and actually the several days afterwards. And we do talk about it being triple witching, but sometimes industry participants call it quad witching, because there's the index rebalancing as well that could impact moves one way or another, because some of these top constituents have moved significantly downward. Think of NVIDIA, right? And so as they're rebalanced lower in portfolios, it could exacerbate portfolio moves. And it's done it to the upside, and it could also do it to the downside due to the activity we're seeing today.
Well, speaking of the upside, we have the 30-year mortgage rate basically at levels last seen during the financial bubble, the housing bubble, excuse me. And this, of course, has some of these construction and home building stocks down sharply. What are options telling you what's ahead in terms of the volatility?
Well, if we look at the 3-month VIX, it's not actually spiking either. And so if we take a step back and look at what was one of the biggest indicators today in the inflation move, that was actually the shelter cost, right, up 0.7%. That's the highest monthly change since January of 1991. And you're also seeing the month before was 0.5%. So housing is getting very expensive. We're at 14-year highs on the 30-year mortgage. The way that we can actually reduce that type of inflation is something the Fed can control, and that's by raising rates. That's why you're seeing 100 basis points being factored in now, to the tune of even 30%. So we actually need to get housing under control because it is getting very expensive. And so rents aren't even close to what the cost of housing is.
Stay tuned. More volatility ahead. Kevin Kelly of Kelly ETFs, thanks for joining us for Options Insight today. And from New York, this is Bloomberg.